China kicked off the new year by easing its monetary policy. The People's Bank of China lowered the amount that banks have to keep in reserve, the reserves they hold at the central bank. The widely expected cut will go into effect starting Monday. Joining us is this hour's panel, Dan Geltrude, from the founder of Geltrude and Company, as well as Yahoo Finance's Dan Roberts. Let's start with you, Mr. Geltrude. Dan, we expected this. It's a 0.5% for the major banks. Will this be enough? I think it's going to inject, about $180 billion of easy money into the Chinese economy. I
don't know if China has much of a choice in needing to do this. Look, the facts are this. China has 20% of the world's population. They have basically 1.4 billion people. They got to do something with them. Keep them happy enough, that's what I say, so that things stay stable. One of the ways to do that is to make money available to them so that they can put it into their businesses and keep their economy moving internally. We already know that China is a huge exporter of goods, right? People are going to China to have things made, and then it gets pushed out to the rest of the world. This move is signaling that China is focusing in on, we need to start stimulating things internally. Potentially some infrastructure type projects would probably be helpful. But let's make no mistake about it. China is feeling the pressure of the world economy up against them. And President Trump has made it infinitely clear that China is the target for the entire world.
Well, and feeling the pressure of its own economy, right? Its own slowing economic growth. Now, Dan, does this help Chinese people, or does it really just help the big Chinese banks? Because allowing that reserve to be lower, we talk about the infusion of capital, but really you wonder if it'll just allow Chinese banks to play more with money that had to be in their reserves previously, right? I mean, you talk about, 800 billion yen in terms of instant infusion into the economy. But I don't know whether the average Chinese citizen sees that money. But it certainly helps the big Chinese banks, which they need it because of the slowing economic growth. So it's not just the U.S., right? I mean, it's the global picture, but it's also China as a really problematic economy over the last year. I mean, I remember just 2 years ago, we were talking about China cutting down on tightening capital controls and talking about how Chinese companies were feeling crimped by that. Now, this is a little bit China waving a little bit of a white flag in the sense of, well, we need to do something. As you said, we need to take action.
Well, they haven't really slowed it down, even though they talked about slowing it down. Over the past year, they've already been putting some more liquidity into the system. This isn't the first time they've done it. What's interesting is that the timing of it before the signing of the trade agreement. We also, by the way, got a manufacturing number from China today, which showed that their manufacturing is still expanding, even if not quite as much as economists have predicted.
So if you're an investor and you're trying to figure out the investments, because we're having guests come on the program and say, look, emerging markets, and what we heard just last hour about emerging markets are going to be tied more to China than perhaps we are as we decouple from China. If that's the case, one of the things that's going on in the Chinese economy that doesn't get a lot of attention is the population is now aging out to the point where they're not going to be able to sustain the kind of growth that they enjoyed when they were coming up over the last 20 years. What does that mean for me if I'm about to make an investment choice based on that economy growing and being tied to other, whether it's India or Vietnam?
Well, and its economy is still growing. I mean, let's say its economy is still growing. The growth is slowing, different from a recession. Yes, exactly right. So look, I would just answer in terms of the big tech names. I would still feel very bullish on Tencent, Alibaba, JD.com. Those companies, I don't think are necessarily going anywhere.
I think this is a short-term play by the Chinese. That's the bottom line. You start putting that money, quote unquote, out into the market. Ultimately, if the economy doesn't do so well, we saw that here in 2008, you run into a big problem.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.